so one of the biggest one again is that inflation rate. So CPI, we're currently sitting at 1.9% year over year in August, which is our last reading that we had there. So things are certainly easing when it comes to inflation, and they have been, and it's very, very positive. The target range that the Bank of Canada looks at, they want to be around that 2% mark. And so being slightly below that, it's positive for where inflation, it's positive as far as where rates will potentially go. I would say the one thing holding back, because the conversations I have are, well, that's great that inflation's come down, certainly from the peaks that we were at one point. But why? Other than the positive news that we just had on September 17th with the interest rate drop, but why previously then were rates not coming down quicker? And Tara, you had mentioned it. It's another one of those words, unfortunately, we hear over and over and over again, and that's tariffs, right? I truly believe, and I mean, it's been put out there, that because of the inflationary nature of tariffs are a tax on products that come in or products that are exported. And so by nature, they increase inflation. And because of that, the Bank of Canada is cautious, right? So they pull back, or they hold back and pause these interest rate decreases as a way of being cautious as we kind of navigate through this market and these changes. But as we saw with that recent the recent drop or cut in the overnight rate on the 17th, we are still moving forward. And there are these other factors. One of them being unemployment rate. So we're sitting at 7.1% as of August on unemployment. And when we look at all of these pieces, again, inflation is a huge part of what gets baked into making these decisions by the Bank of Canada, but it's a piece of the pie. Another piece would definitely be unemployment, or the job market. And so we look at this higher unemployment rate, and kind of the labor market loosening. And so this will push the Bank of Canada more and more to ease on rates, right? Because one of their big kind of tools or levers that they can pull is interest rates. So if the economy is slowing down, this is a way that they can ease things and improve the environment. So we've got our inflation. It's just slightly below target, but let's call it at target. Unemployment, higher than what we would like it to be, that's for certain. Real GDP. So this is when we kind of dive into the numbers a little bit further, and that's fallen about 0.4% quarter over quarter. So things are slowing down when we're looking at it from an economic standpoint. And then consumer sentiment. So how are people feeling? And people are cautiously optimistic, but I would lean a little heavier on the cautious side of things, right?
Right.
So when we look at kind of these major factors that contribute to what the Bank of Canada is going to do, people, that rate trajectory is certainly pointing downwards, which when we look at that from a real estate perspective, and for our realtors and our of course our clients, things are looking good that way.